irresponsible bets, took huge losses. There was no regulatory oversight because there was a gap in the system. We were then forced, we had no choice but to try to stabilize the system because of the implications that the failure would have had for the broad economic system.
Now, Bernanke did say he thinks the government actions give the taxpayers the best chance to recover that money that was given to AIG.
Well, for an instant auditor of all this, Matt Tuttle back with us again from Tuttle Wealth Management. And Matt, let's talk a little bit about this TALF plan. Tony Crescenzi over at Miller Tabak says this is the turning point, the plan that could really turn the tide, I should say, for the markets. Do you agree with that?
I don't know if it's something that can turn the tide, but I do think on the surface it looks like a good idea.
Why?
Well, I think, you definitely want to be able to spur the lending markets, but what concerns me really is that there just doesn't seem to be an overall comprehensive plan. We're kind of sticking our finger in the dikes here and there. And, there's also too much, I think, of a focus on more lending, more debt, which is really what got us into this problem in the first place.
We tried to talk about that earlier, Matt, which is this balance that the government is trying to strike between not going back to the levels, exactly what, as you say, got us into it in the first place, but at the same time, not letting the economy kind of fall off a cliff. I mean, it's very difficult to manage that. I mean, what do you think of the job they're doing on it?
So far, no good. I think the market is kind of telling you, is going down every single day, what people are thinking about this. It's a very difficult job. It's a tough balancing act, but I'm very concerned with the way that they're handling it so far. But I do think the TALF program, on the surface, looks like it's a good idea.
Really quick, last week you were saying you were on the verge of getting back into the market a little bit.
That's right.
Yeah, I do expect, well, obviously today is up, and we do expect a bounce, but we don't think it's going to be anything sustained.
Yeah, tough to time that type of thing, too, as we've seen the last couple of weeks. All right, Matthew, thank you very much. Let's get back over to Ashley in London. I guess we're relying on the Chinese for everything now, huh, Ashley?
Yes, certainly giving a nice boost to the Chinese markets today, although some markets not doing as well. Talking of which, let's go to see what's been going on in Asia today, and for that we go to Nina May of Sky News Business Channel in Sydney. I was referring, Nina, to the Aussie markets today, finding out some not such great news about your economy.
Yeah, that's right. Well, is it with us? Actually, we are spoiling the party yet again. First of all, let me give you the good news. The Asian stocks were up for the first time in 3 days. And as you mentioned, China's market, it really had a stellar day. The region, of course, bolstered on optimism that both China and Japan will widen efforts to bolster growth in their economy. Now, let's go through the numbers. Japan's Nikkei up nearly 1%. Hong Kong's Hang Seng put on 2.5%. And there is China's figure. I wouldn't mind that in Australia, up more than 6%. Okay, the bad news, the Aussie market hitting fresh lows not seen since August 2003. The ASX 200 dipped by 53 points there, or 1.6%. The All Ords off by 45. Now, in Asia today, the bad news just keeps on coming for the car makers. Toyota Motor Corp, which of course, as everyone knows, is facing its first loss in 59 years, suffered a record drop in its sales in America. Now, here at home, our latest GDP figures came out today and did nothing to dispel fears that Australia is headed for recession. Growth contracted by half a year in the December quarter, and that's the first negative growth figure in 8 years, and it was much worse than economists had expected. Now, our Treasurer says the result, though, could have been much worse if it were not for the government's stimulus package back in October, and he has reiterated that Australia has performed far better than most countries. So it's going to be interesting to see, Ashley, what happens in the next quarter, because of course 2 consecutive quarters of negative growth does equal recession. Back to you then.
Yes, it does. Tell me about it. We know all about that in Europe. Nina May in Sydney. Nina, thank you very much. We appreciate that. Let's get you up to speed now. What's going on in Europe? We are still certainly moving higher, although coming off of our session highs just a little bit. Let's take a look at those latest numbers. The FTSE 100 now up still 2%, close to 70 points. We've been up as much as 2.5%. The CAC 40 in Paris also up 2%. As you can see, up close to 3% still on the DAX 30 index in Frankfurt. There is growing speculation, by the way, that oil giant BP may freeze its dividend as income has been hit by low oil prices. In fact, in many ways, the market is expecting it. But good strong day so far for the oil producers. BP up 2.5%. Royal Dutch Shell also up by 4%. We're seeing the mining sector have a very strong day on those hopes that Stimulus packages in China will increase the demand for raw materials. So Xstrata up 11%, Rio Tinto up 8%. And finally, UK